Welcome to On My Way to Wealth, the podcast where busy Gen Xers can learn financial tips as they navigate life on their way to wealth. And now, please join your host, Luis Rosa.
Hello, everyone. Welcome to another episode of On My Way to Wealth. My name is Luis, and I'm your host. Thank you all for tuning in. Today, I want to talk to you about things you should think about before you consider moving to a lower income tax state. I know a lot of people, especially now during the pandemic, have had the opportunity to work from home or work remotely from somewhere else. And as a result, they say, why stay here? If we no longer need to because of the job, I can still keep the same salary and maybe move somewhere else that's cheaper, right? Which is a great idea. But I wanted you to consider certain things because taxes obviously is one big part of it, which I'll get into later on in the episode. But there are also other factors to consider as well. So I'm going to cover just a few brief ones that you should consider and then dive right into the larger complexities that exist with taxes when it comes to moving and working in another state, things of that sort. So just for those of you that don't know, I used to live in New York most of my adult life. Then I moved to the state of Nevada for quite a bit now, over 5 years. So I moved from a high income tax state, which was New York, all the way to Nevada, which does not have a state income tax like Florida and other states, which is great, right? So in terms of the taxes, it's a big difference because when you consider like New York City, for example, where I lived, I paid New York State income tax and also New York City tax. So moving to the state of Nevada is a savings in that regard because I'm no longer paying state and city tax, just the federal, which is great. But there were some things that I noticed that were significantly higher than when I was in New York when I came to Nevada. For example, when I went to register my car, I was astounded by the price that I had to pay to register two vehicles. It was over $1,000 initially. And I was like, whoa, so a lot of states, although they do not have a state income tax, they make up for it in other ways. So one of the things that you should consider are just small little things like that, like sales tax, local property taxes. If you're going to buy a house, there's a way where you can log into the website for that particular location and find out how taxes are assessed so that you have a good idea what your property taxes might be. And obviously a car registration fee is not going to be something that's going to make or break your decision to move somewhere. But these are small little things that you should consider so that at least you're not surprised when you do move. All right. So take a look at your property taxes, take a look at the sales tax, take a look at things like registering your car. And just those personal income taxes like that you might pay on little stuff because they could add up. Another thing to consider is the healthcare system. You could do a quick Google search and find out the rankings for the healthcare system in different states, because maybe if you're young and you don't have any current health issues, it might not be a big deal for you. But if you have kids or if you have a condition, you definitely want to look into the healthcare system in that particular state just to make sure that you have access to good healthcare. You want to be aware of the rankings for the different hospitals, et cetera, because that could be a big factor in moving. So even though you might be moving and saving money, if you're moving to a state where the healthcare system isn't as great and it's not convenient for you based on your situation, then it might not make sense to do. So definitely take a look into that. Obviously, if you have kids, one thing to consider is the education system. The school system. Again, you could do a Google search, I'm sure, and there'll be plenty of websites that will give you rankings. There's things to consider. When I was thinking, I remember in New York, there were places that had very high taxes they had a breakdown. Some of it was property, and then there was a portion that was specifically allocated for school taxes. And I remember that the public school system in those places was phenomenal, because those school taxes paid for the school system, the teachers, et cetera, So yes, you were paying higher taxes, but at the same time, you didn't have to pay for private school. So I knew people that lived in New York City, for example, let's say the Bronx, Uptown Manhattan, et cetera, where they didn't pay as much in school tax, but then they ended up having to send their kids to private school as a result because they didn't like the school system in their particular area. Whereas somebody moved a little further up north and they were paying more taxes, which some of which are deductible if you itemize your deductions in your taxes, but then they had a better school system and the kids were able to go to a public school system. So in essence, it was cheaper because A, the tax deduction, and two, they didn't have to pay for private school. So that's something to consider as well. You know, and I know some clients that have moved to a lower income tax state or no state income tax state who then have to send their kids to a private institution instead. So that's a big factor there. If you're making a straight up move where you're literally just picking up, going and finding a new job on site in your new state, another thing to consider is when you're looking at the cost of living, you have to compare that to the salaries. You know, so yes, there are things that are cheaper when you move to a no state income tax. For example, you know, maybe rents are cheaper, general cost of living might be cheaper, but at the same time, so are the salaries. You know, so if you're moving, you know, let's say you're not keeping your job in the state where you reside now and you're moving to this new place and finding a new job, that's something to consider because sometimes the same exact job could be a significant drop in income in one of those states. You know, so you have to then figure out if the lower cost of living compensates for the lower salary. You know, now with people being able to work remotely because of the pandemic, some people are actually able to keep their higher salary and then move to a lower income tax state. And that's going to be the bulk of what I'm going to talk about next because there's so many different tax consequences as a result. One more thing to consider before I move on to that is also estate taxes. Right now, most people don't have to worry about this. From the federal side, if your estate when you die is worth less than 11.7 million as an individual, then you don't have to worry about paying estate tax. They call them death taxes. As a couple, it's $23.4 million. So this is for 2021, they usually get inflation adjusted throughout the years. So not a big deal, right? Most people don't have to worry about this. However, states can have their own estate taxes, their own death tax, which are probably a lot lower than the IRS threshold. So before you make a move to a lower income tax state, find out if they too have an estate tax. And if so, how much is that? Because if you're planning to make it your long-term residence over the years as you build your wealth, you might be moving to a state where your heirs, you know, your estate will then end up paying taxes on a certain amount of money that you give when you die, right? So that could be a big factor as well. So it's not just looking at income tax in and of itself. There's all these different little things to look out for that could bite you later. You know, and then now let me move on to the bulk of what I wanted to mention in terms of taxes, because this impacts a lot of people today. I've seen several of my clients already who lived in a very high cost of living, very high income tax state, move to a lower income tax state, lower cost of living as well, and be able to keep their jobs in their state where they were and work remotely, which is excellent because then you're making the same money. So to some degree is the best of both worlds, you know, initially when you first look at it. Now, here's the thing. There are currently 6 states that have something called a convenience rule. So basically you are able to work remotely if it's quote unquote for the convenience of the employer. And the convenience rule is very broad, but in essence, you are then subject to income taxes on the money earned from that state, even if you moved out of that state. So to give you an example, let me mention the 6 states first of all: Arkansas, Connecticut, Delaware, Nebraska, New York, Pennsylvania, and temporarily the state of Massachusetts has done an emergency order where they too have joined the other states in this convenience rule. So in essence, here's what happens. So say you live in the state of New York and you say, you know what? The pandemic happened. My employer is okay with me working remotely. I'm going to pick up and go to Florida. There's no state income tax in Florida, and the cost of living is cheaper. Sounds great, right? Now, here's the catch. New York State is one of those states that has a convenience rule. So New York State says, I don't care where you move to, you're going to pay New York State income tax, even if you do not live here, and even if you do not work here, because your New York income is being considered New York source income. So in essence, in fact, I have clients in this scenario that moved that very same scenario from New York to Florida, every year they still have to file a New York non-resident return and pay state income taxes on the state. Now, they don't have to pay taxes on all of their income. It's only on the New York source income. So let's say if they're married and their spouse gets a job locally in Florida, they don't have to pay New York taxes on that Florida income, but they do have to pay New York taxes on their New York income. So I want you to really consider that, because some people might be thinking like, hey, I can just move from New York to Florida and pay no state tax. And that would not be 100% correct. Yeah, Florida's not going to tax you on it, but New York still will. And that could be huge, right? Another thing is there's a 183-day rule to determine which state is your legal domicile for the purposes of taxes. So if you spend 183 days or more in one state, that's technically then your residence state. The reason that's important is because the state that's considered your domicile is then going to tax you on all of your income, regardless of where it was made. And then the state where you work out of, even if it's not the state we live in, if they're one of these 6 states, they will tax you on the income that you made from that particular state. Now, a lot of states get very aggressive with this 183-day rule. So it's not as clear cut dry, like, okay, I spent 183 days in Florida, so therefore I'm a Florida resident. Some states get very competitive with this, and they want to, they basically make these rules where you could be considered to have your domicile there, even if, regardless of the 183-day rule. Like things they would look at, for example, are where do you go to church? Some states could actually look at that. Like, where is your church? Some states could look at where your primary care physician is, So you might live and spend more time in another state, but if your primary care physician happens to be in that other state, that state might try and say that you live there as your primary domicile. Things like, where is your car registered? So you want to know these rules. Be sure to speak to your tax advisor if you're complementing or already have done one of these moves, to make sure that you are properly withholding taxes for the states that you are going to end up paying taxes to, because you don't want to end up owing one state at the end of the year and be penalized for under withholding. So definitely something that you want to speak to your tax preparer. Now, another thing to consider too, there are some states that border each other that have some sort of reciprocal relationship. So you have states, for example, like New York, Connecticut, New Jersey, Pennsylvania, where if you live in one and work in the other, one state will give you credit for the taxes that you paid the other state. So you avoid what's called double taxation, which is a great system, but that doesn't work out all the time, like the example I gave with New York and Florida, right? So you definitely want to know that, it's great. Yeah, if you live in New York and you just move like next door to Connecticut or whatever, that's fine. You have the reciprocal credit, so you're not being double taxed. But if you're doing a move like that, like Florida, New York, it might be something that might bite you later if you don't realize it. Like, you definitely still need to pay New York taxes on a New York source income. So that is a huge one. Also, be sure to then change your withholding accordingly. Speak to your tax professional. Then you go to your employer and you fill out the W-4 tax withholding form. And also each state has their own particular one typically, so that you make sure that you start withholding taxes for the states that you're going to end up owing taxes to. Very, very important. So another thing too that used to be a benefit when you moved, depending on the reason, you were able to deduct your moving expenses back in the day before the Tax Cuts and Jobs Act of 2017. Where you could no longer deduct your moving expenses as a result. There are some exceptions, which is if you're in the military and you got like a permanent change of your orders basically change and you have to move as a result, you could deduct some of your moving expenses out of pocket. So definitely speak to your tax professional about that if you're in the military and you have to move because of a change of orders. But other than that, you could no longer deduct your moving expenses. So if you have to move, inquire with your employer. Some of them may have some sort of program or incentive where they might pay for some of your moving expenses. That might be great. I mean, usually you see that more in the context of when you first get a new job and you have to move as a result, but it doesn't hurt to ask, and some of them might be considered taxable income, et cetera. So just find out how their program works and inquire about it. So pretty much just to give you a quick recap, before you move to a lower income tax state, look at their local and state sales taxes. How much little things like registering your car costs, which you can find at the DMV website. Find out if they have an estate tax, death taxes, and how much. Look up the school ranking systems if you have children and that's important to you. Also, the healthcare system. You want to look at that as well. If you're straight up just moving there, get a new job, see how much things cost, like your cost of living, right, rent, et cetera, but also make sure to compare that to what the salaries might be, because your same exact title might make significantly less in one of those states. Then consider the convenience rule. So 6 states plus 1 temporary right now: Arkansas, Connecticut, Delaware, Nebraska, New York, Pennsylvania, Massachusetts temporarily. You might end up paying taxes on a state that you don't live in or work in if that source income is considered source income for that state, for one of those. Okay, so this is a huge one that I want you to know about. Figure out which state is going to actually become your domicile. You might end up filling out multiple state returns throughout the year. So keep track of your dates, because you can then adjust the income taxes due based on the dates that you spend on those states. So that's very important. You could no longer deduct your moving expenses unless you're in the military and you got a change of orders. Make sure you adjust your W-4 and any other local forms for proper tax withholding for those states, and speak to your tax professional before you even consider any of those moves to see if it actually makes sense. So I hope that you learned something good here. And if you're planning on moving or already moved, be sure to follow these guidelines to make sure that you're not surprised at the end. If you have any questions, send me an email at luis@onmywaytowealth.com. And look forward to seeing you on the next episode. Thank you for listening to On My Way to Wealth. If you have any questions, please send me an email at luis@onmywaytowealth.com. The information provided here is for information and education purposes only. The opinions expressed herein are solely those of myself, unless otherwise specifically cited. Material presented is believed to be from reliable sources, and no representations are made by my firm or myself about other parties' information or accuracy or completeness. All information or ideas provided should be discussed in detail with a financial advisor, accountant, or legal counsel prior to implementation. Thank you.